Hello, folks. Welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 30th. I'm Eric Wilkinson, and we are an educational company where we're here to talk about option strategies that we can implement into the markets with our assumptions. So I'm going to talk about those little details in webinars that I do on Thursdays. In these daily market commentaries or these spotting the trade videos, I am going to talk about the trades that I'm implementing based on the assumptions I come up with in this environment, and ultimately leading us to the path of finding the best option strategy for any given assumption. So without further ado, let's get on with it. Before I do that though, make sure you guys hit that subscribe button, and right next to it, there's a little bell. Click on that because sometimes I pop in here unannounced. Like today, I'm coming in a little bit early because I want to get on with my trades and talk about those that I'm putting on today. We mentioned them yesterday. They're coming through today, and I'm going to talk about those in detail here in a minute. Smash the like button, and feel free to comment over there at the bottom throughout this video. I'm going to try and keep an eye on it. So if you guys want to have me look at something, throw it in there. I'll take a look at it. All right, so let's get on with it. Economic data across the pond. We got the German unemployment change, a little bit better than expected, was lowered by 53,000, expected to be only 40,000. So really that, translates to higher. They do it a little bit different with the negative. European CPI, Consumer Price Index flash estimate, coming in a little bit hotter than expected at 3%. We got the core CPI flash estimate also, which is going to strip out food, energy, some of those more volatile aspects of that data point. 1.6%, expected to be 1.5. Italian preliminary CPI coming in a little bit better than expected at 0.5%, expected to be 0.4%. Now let's move over here to the United States. We got our Chicago PMI numbers. Now remember, these PMI numbers have been the ones that have been a bit of a wet blanket on the overall economic data front. Well, again, continuing with that, we got 66.8, expected to be 68. That is the lowest level we've seen since basically June, but we're starting to see this really kind of come off a little bit here on these PMI numbers, which is what I've been talking about for a couple of months now. We've been seeing these numbers come in lower than expected and lower than the previous month. So that is waning on the overall markets. We got this CB consumer confidence. Now this is a gauge of how you and I feel about the overall economy. It was expected to be 22.9 or 122.9. It came in at 113.8. So a big miss on that front. Consumers not confident. A lot of things going on in and around the world right now that are weighing on some of these folks' confidence. Obviously, you got things going on in Afghanistan, China, Taiwan. We've got the supply chain issues. All of those things are weighing on the consumer right now. So without further ado, let's get on with the overall markets. Let me share my screen here for you folks, and we'll get started. See, I don't think I want that one. You can't see that screen very well. All right, there we go. Crude oil is coming off a little bit. I expect more weakness here in crude oil as we're talking about these manufacturing numbers like the Chicago PMI. Those numbers are coming in slightly lower. I think that that's going to weigh on the demand for crude oil. The only thing that's really holding this thing buoyant right now is the supply issue that we're having coming through the Colonial Pipeline. Now that got shut down, and 90% of the Gulf oil is shut down right now. They'll probably start ramping that stuff back up again here as the storm has passed, but it's going to take a little bit longer, and that's going to cause like gasoline prices to maybe jack up on the East Coast there. We've got gold futures. They're off on the day. We've been seeing the dollar weaken a little bit here recently. I would think that that would maybe give a little bit of upside to gold, but we're not really seeing that at this point. Bitcoin, it's stuck right there. It seems to be pretty complacent. So I'm not really a whole lot to talk about with Bitcoin, not making the big moves that we've seen before. And another thing with this is we're seeing the new Reddit traders. Remember, they went from these stocks like GameStop and AMC. Some of those names got really jacked up. Well, we're seeing those folks get out of those types of names. Why? Because they've started settling down. They're seeking volatility. They moved over to the cryptocurrencies for a while there, and then we started losing volatility there. Now they're on to the NFTs where they can really see some serious volatility there, I'm sure. So it seems like we're starting to settle down here in some of these other markets along that line. VIX, I think we're going to start seeing the VIX move higher here as the equities are signaling some tops here. We've got the Nasdaq. We talked about the Nasdaq was being driven higher yesterday by most of the FANG stocks. As a matter of fact, the Nasdaq, in general has been driven up this entire time through those FANG stocks. As a matter of fact, they're the ones that are heavily weighted in this index and have been the ones that have been able to outpace the move to the upside. So this index right now isn't a perfect gauge of what's going on in the tech sector as far as I'm concerned. And we'll talk about that when I get on to my trades here in just a moment. But Dow Jones Industrial Average up slightly on the day, but well off the morning open there. And E-mini S&Ps as well are in negative territory, but pretty vague as to what we're seeing here in especially like this chart. This looks more of like a pause kind of day where we would resume to the upside. Nasdaq, Dow Jones, very similar there. Finished near the lows of the day, and any of these stocks, though, is going to make it look pretty bearish. We can see overnight, we got a little bit long, but as soon as we started getting this economic data across the pond and here in the United States, we can see that the market has been weighing on that, or that's been weighing on the overall markets. Is this a top? I believe it is not necessarily a top, but it is an opportunity to start adding some negative deltas. I talked about this. We got the move to the upside. I'm trying to cover some positive deltas, add negative deltas. Positive deltas, just remembers, when you say positive deltas, that means that you benefit from the market moving higher. And when you say your negative deltas, you benefit from the market moving down. So when you're looking at your portfolio, and you should do this beta weight it against an index, say the SPY, SPX, the Qs, depending on what your portfolio is heavy in, then you should use that as a gauge to determine whether or not your portfolio is overall bullish or overall bearish by doing that beta weighting. It will tell you there if you don't know how to do it on your own. So we're seeing a bit of a pause right now. Overall weakness, though, across the board in equities. So with that said, yesterday I talked about topping patterns and waiting for the confirmation on that type of technical setup for a swing trade. And with that said, we've gotten our technical setup here in NVIDIA. So we got a topping pattern. Today we've got the red candle that we were talking about. You get that confirmation candle. That's when you want to start initiating a bearish trade for a swing trade, all right? And then we talk about some of these details in these webinars. But with that said, you can see I've got pretty low volatility here. If I kind of draw a couple of lines here to determine, the highs and lows, we can see this is relatively near that low water mark, if you will, for volatility. And if you guys follow my webinars, you guys know that I talk about volatility almost more than anything else. Why? Because it determines pricing in the options more so than anything else. Yeah, there's theta in there and that comes out. Delta is going to adjust with the markets moving, all of those things. But the thing that we can look at for our pricing on any given day is the volatility, or Vega, which is just implied volatility. All right, across the board, anywhere you're looking. Now, so that we know determines pricing, right? If volatility is really low, we know they're really cheap. And if it's really high, we know they're very expensive. I can look at this chart and see from looking at implied volatility here that we can see that the prices, based on this number, we can see the prices in the option montage are going to be really cheap. So that said, if I know I have cheap premiums, a bearish assumption, I'm going to immediately look to buying some puts. Now, when you're buying puts, though, you want to limit that theta decay, so go further out in time. I like to go outside of 70 days to expiration for this. That's where theta is, you get your bang for your buck there. You don't really get the theta ramping up at outside of 70 days to expiration, but you're not paying an exorbitant amount of money for these options, especially for a swing trade that we're just looking for a trade to hold on to for a couple of weeks. So that theta decay isn't going to be ramped up enough at that point in time to really be a detriment. What we want to see is when markets come off, we usually see when markets come off, volatility starts to jack. So if I get volatility starting to move higher, this underlying moving down, that is the kind of situation we want to be in, right? When you're buying an option, you want your directional move. That delta is going to help you out. And then on top of it, if you get volatility jacking up, you are going to get paid double for the most part. So that's what I'm looking for, a pullback here in NVIDIA. Now, I did this really small because I didn't want to put all my eggs in one basket in this side. So NVIDIA, as you guys probably well know, they make computer chips, especially for the cryptocurrency guys. They make the chips that really, the video cards and things that are in all of these mining operations. So that said, I'm looking at NVIDIA just to have a little bit of a pullback in here to take advantage of. And I went into the November to limit that theta decay, right? It's about 80 some days to expiration there. And I bought the 215 puts in NVIDIA for $11.80. Now, remember, when you're doing the options, you have to multiply that by 100. So every one contract I'm doing is $1,180. Okay, so that's why I did it really small. Looking for a bit of a pullback here. Maybe come down and test this 50-day simple moving average here to the couple of lines in the sand that I was looking at here. Now, we could say right here, we've got a little bit of a gap cover here to take a look at, and that lines up with right around 210. So my 215 puts would be in the money. That's exactly what I'm looking for. So a move down to this area to cover that gap. It also will come down here and act as a support area because it acted as resistance before. So I'm looking for that move back down, not really piercing it too much, but maybe just a bounce and up and away for NVIDIA, buying those 215 puts. And then Intel, all right? So spreading this out just a little bit for the computer sector. All of this we talked about. Even AMD is looking kind of weak, but I chose Intel. Why? Because of my recent my recent try at buying a computer with the capability of handling 2 monitors. But if anybody recognizes what that is, this is an integrated video card for Intel's Inspiron. All right. Now it's supposed to work a little bit faster, but you do have a DMI port, but I like to have multiple screens. I don't know about you. I can't fit everything on one screen, but using a VGA, which doesn't even send analog, this is probably the worst. The only reason why you want this is if you have a tube monitor or something like that crazy, maybe a projector that you're going to throw on this. But if you're having the need for a projector, then you don't need the Inspiron. It's just way too much computer. So VGA, I decided to toss this out the window. The other thing with this is I can't upgrade my video card to a faster video card because it's already integrated. So all of those things I think are going to actually hurt Intel going forward as people more and more start to realize I might be way ahead of this, like a year ahead of this, folks. So keep that in mind as well. But all of these things that I've gone through with Intel in the last couple of weeks, I decided rather than AMD, I'm going to go to Intel. Why? Well, after going through this whole muck with Intel, I ended up getting an AMD card in my new computer. So I'm going to not play that to the downside if I just bought it. With that said, I went into Intel, and very similar to that NVIDIA trade, we can see that we have really low implied volatility down here. So if I have low implied volatility, I know my premiums are really cheap. That leads me to leaning towards buying options. If I'm buying options, I know I have to get further out in time to limit that theta decay, so I'm looking at the November. I have a bearish assumption in here. What do we do with a bearish assumption in low volatility? You can do a put spread, limit some of that, but with volatility as cheap as it is, I just don't think that it's going to go much lower. So I don't have that need to try and pay off some of that volatility with doing a spread is what I kind of look at it as. So in the November, I bought the 52.5 puts in there for $2.33. Again, just looking for us to roll over a little bit here and test maybe this low here, but also going to be looking at this 50 Fibonacci as this market has continued to slide. I think that might be a target before we rebound. But at the end of the day, I'm going to be trying to look at somewhere in and around this area first to see if we get a pause. If we rip through that, then obviously I think that the 50 handle in Intel could be in jeopardy. All right. So those are the things that I've done. I'm also working to get out of my SPY. It's actually very close right now. So I might as well talk about it. I'm only pennies away maybe at this point. It was a little bit further away earlier this morning, but it looks like I'm very close now. So let's talk about it. SPY, we've been playing this on the upswing for a swing trade. We broke outside of this trend channel there. As soon as we got back up in there, I told you, hey, we're firing on all cylinders. We're going to start making some new highs here and moving to the upside. Added some positive deltas in this trade. Well, during that time right here, if we draw a line down here, whoops, not a very good line that I'm drawing there. So let's try and do it with a straight line and draw this straight down there. Now you can see that when I got involved in this trade, we had some pretty high implied volatility. Getting back up into that channel, I believe that we were going to see some volatility come out of across the board in the markets. If you're starting to move higher, generally speaking, we see some volatility coming out. Gold being one of those ones that doesn't really follow that mantra. But with that said, we're looking for a bullish move. Volatility was high in here. I've got a bullish move, volatility high. Do I want to buy calls and see this volatility come out? No. Why? Because if I bought something that volatility comes out, those premiums come out, and I could be losing money despite the fact that the market's moving in my direction. So I'm looking to take advantage of high premiums, that volatility coming out. So I went into the September because I want theta on my side, right? I go into September and sell the 415 puts, all right? 415 put lines up pretty close to the point of control there. And that was something that I felt if it got down to that level, I would be more than willing to take the stock, in this case, the ETF, into my possession. Point of controls are where the most time and volumes are spent, and that's usually where we settle down. So I wanted to get involved in SPY. If it went way down there to that point of control, absolutely. And if it doesn't and starts moving up and away and all these other levers and pulleys work in my favor, then I get to walk away with a nice little premium there. So SPY, I went in and sold the 415 puts, like I said, for $2, and I think it was like 59 cents, $2.59. I'm trying to get out for about 50 cents right now. It is 50 cents right now, and I think it looks like at this point it's trading right around 53. So looking to get out of this trade for a $2 profit, and I'll look to retool and die. We're right up there at that value area high. That's where we should start losing some resistance, or seeing some resistance, and maybe a pullback down to the trend channel again. That's where we'll reassess for a bullish move there. Okay, folks, that's all I got. Like I said, remember to smash that like button before you go. Also, hit the subscribe. And there's a little bell right next to it, because usually I'm going on here in about 20 minutes, but I wanted to talk about these trades so that you guys had the opportunity to either trade them or just kind of play along and watch it as we go. I don't know what that's all about, but watch it as we go. I wanted to pull up this Intel as the confirmation, NVIDIA making a bit of a better case there. And, you know, AMD looks pretty bad as well. You might want to take AMD rather than Intel if you were looking at some of these. I just showed you the reasons why I picked Intel over AMD. I might be completely wrong. You know, jump on your own assumptions. That's what I'd like to say. If there's anything you take away from here, I'm not here to try and give you an assumption on where the markets are going. What I want to do is increase your probabilities of success by implementing option strategies in the correct way. I just spent an hour and 30 minutes yesterday talking to a gentleman that was trading options and talking about his anxiety in trading these options because he really didn't know what the levers and pulleys of options were doing. He was talking about buying options and, getting that move, but just watching him lose money and not understanding why. And I asked him, some of the details around that, and he really didn't have any idea where volatility was when he was trading those things. So don't make those mistakes. Make sure you have the edge with your education, and don't get involved in trades that are going to be like rolling a ball uphill. That's buying options with high volatility or selling options with low volatility. You are literally trying to it's a Sisyphean effort. Sisyphe is the guy who rolled the rock up the hill, and that never ended. All right, Greek mythology. All right, if we're going to talk Greeks in Vega. All right, that's all I got, folks. Make sure, again, you hit all those buttons and comment over the side. I'll circle back around for you folks to make sure everybody's clear concept. Finally, if you can't take that, take it easy.